Good afternoon, everyone, and welcome to the 33rd session under AIM Prime, which is on understanding how to build a convincing and impressive investor pitch deck. Today, we will have some speakers who are startup founders from Venture Center's ecosystem who would be sharing their story of how they have been able to build the killing investor pitch deck. Today's session will be conducted by Dr. Premnath. So over to you, Dr. Premnath.
Can you hear me?
Yes, we can hear you.
Okay, good. So thank you, Shoma. I think, Shoma, you can put up the slides, please, and then we can take it from there, right? So today's session focuses on investor pitch decks. And let me also just ensure that all of you are in. Yeah.
Yeah, give me a moment. I'm just sharing.
Yes. Today will be a very different session than what we are normally used to. I had the option of doing it in lecture mode, but I decided that this is something which is best you hear from people who are just now about closing deals or in the middle of and in the thick of things right now. So today's session is going to be run by entrepreneurs, and I will only intervene a little bit in between. Shoma, my colleague, will run the sessions where our startup founders will be talking. So first of all, let's go to the next slide, please. Yeah. So I'm today's session. This is the outline. The first part, what I'm going to do is very shortly, I'm going to invite Tanuj Gigras from Nayam Innovations to come and speak. Sorry, yeah. Is Tanuj here today? Tanuj, are you here?
Tanuj is here.
Yes,
Yeah.
hi,
Okay, good. Hello, Tanuj. How are you?
I'm doing great, Dr. Premnath. Good evening to you.
Yeah,
Hi,
and
Shoma.
we'll look forward to your comments and discussions. But anyway, first, let me just give a quick overview. We'll talk with Tanuj, who'll talk about NAM Innovations. Following that, I've requested Ashwin Shankar, who runs a company called Divish Mobility, and his brand name is Battery Pool. And then following that, there is a company called Obots run by Runal Dahivade, who will talk about some of his insights. He is into robots which are used for cleaning and so on and so forth, intelligent robots. And in all of these cases, all of them have a very interesting background and experiences and first-hand experience pitching to investors, raising money, and so on. So they will share their insights. Another point I just want to mention is both NAM and Battery Pool are actually just freshly concluding an investment round, and therefore, whatever you're going to hear is going to be fresh off the block. After we finish that, I have a few brief comments and instructions, and then we have three of our own cohort members presenting their storylines. Okay, and these storylines were those which seemed fairly complete, well done, and I thought this is something which all of you can see and learn from, because the storyline helps you build the pitch deck as well, right? So with that, let me first tell that I'm really grateful to all the participants today. it's very important that people hear from their peers and get first-hand information. In Venture Center, one of our great strengths has been the peer-to-peer interactions. And this is not necessarily only things which we do in such sessions or in WhatsApp groups or whatever, but also in things like places like our cafeteria, places like any kind of meetings that we have, get-togethers, and so on. So it is very important to nurture for an incubator, nurture peer-to-peer interactions and learning with very simply because the real practical knowledge and current knowledge actually resides with fellow entrepreneurs. Okay, and it's just not possible for people who are not doing it right now, right there, to communicate the same insights with any authority. So I think it is really, really valuable, and I'm very grateful for Tanuj to agree to do this. I requested them on our WhatsApp groups, and he immediately responded, and he's also going to generously share what his own way of going about it, and also talk through his company as well. So I've requested Tanuj to first talk through his deck and then give insights, but I'll leave it to him. I'll let him decide how he best wants to communicate with all of you. Okay, so with that, Shoma, over to you. You can take over and take it ahead, please.
Sure. So I would like to invite, as Dr. Premnath said, first we'll get started with Tanuj. Just
yeah, it's visible. Yeah.
Yeah. So let me introduce Tanuj. Tanuj is a serial entrepreneur in deep science space. His current startup, Nayam Innovations, is developing a new generation of artificial implantable lenses for vision correction in patients with severe vision impairment like cataract. Tanuj built a team of co-founders, board, and consultants and has been Nayam's driving force over the years. Prior to starting Nayam, he was a co-founder of BridgeDots Tech Services, which provided process development and pilot plant development services to corporate clients. Tanuj has been an independent consultant to various MNCs and startups. Prior to that, he was an investment banker in the mergers and acquisition division of Credit Suisse, a large global Swiss investment bank. He graduated with a bachelor's and master's degree from IIT Bombay. As Dr. Premnath mentioned, over the years, Tanuj has been able to add many feathers to his cap, including great technology, team, investments, collaborations, etc. So with this, I would like to invite Tanuj to share your experience of building your pitch deck and also share your journey and some of the insights and learning along the way. Over to you, Tanuj.
Thank you very much, Soma, for the kind introduction. Hello, everyone. I am Tanuj, and can everyone hear me clearly?
Yes, we can hear you clearly.
Great. Okay. So I am Tanuj. I am one of the co-founders of Nayam, and I'll just give a brief background of what we do. So we are a biotech startup, and we are developing an implant for treatment of cataract. As you know, cataract is one of the most prevalent age-related disorders of the eye, and the only treatment for cataract is replacement of our natural lens with an artificial lens. So we are making a lens which is customized to each individual patient so that they don't have to depend upon spectacles after their cataract surgery. So it's a high risk class C device. We have intellectual property on the material science, which we have developed. We have intellectual property on the manufacturing process, and we have intellectual property on the instrumentation part. We started working on this technology about 6 years ago. And over the past 6 years, we have raised a couple of rounds of investments from institutions, as well as individuals, as well as grants, from the government. And so I'm happy to share my experience today, and hopefully can share some of the insights and learnings which I have gotten over the years. Okay, so what I would like to do is first, give a brief background, give a brief, learnings of what is all a pitch deck is about and what should a pitch deck contain, and then I will reinforce that learning with our own pitch deck, I mean, which NIAM sometimes uses for the investor pitch sessions. Okay. So, I mean, a pitch deck is the first interaction you do and the first image you form with an investor. Okay. So typically, either you are getting introduced to an investor by someone, or you are writing a cold email, or you are presenting in some conferences. The pitch deck is the first image of the company you are presenting to the investors. Okay. So it is important. So think of a pitch deck like a real estate. Okay. So you have a real estate, like imagine you have your own house. Okay. And in your house, you have a separate space for a drawing room, you have separate space for a bedroom, you have separate space for eating, you have a balcony for, for chilling out, and all, I mean, you don't mix these things up. So a pitch deck is like a real estate, and you have to use it like a real estate. Okay. Don't mix and match things. Okay. So, I mean, there are only 3 important points you should remember while you are making a pitch deck. Number 1 is precision, that you have to be precise in your pitch deck what you want to say. Okay. Number 2, you have to be very clear in what you want to communicate. And number 3, you have to have something in the pitch deck which makes people remember when they have seen your pitch deck. I mean, they should remember it for the next day. Okay. If you have done these 3 things, then the job of the pitch deck is over. I mean, you have gotten the interest of the investor, and you have gotten the interest, that initial interest which you have wanted, and with that you have gotten your next meeting with the investor, which could be more detailed, where you can explain more about your technology, you can explain more about yourself and your team and your product, etc. But the job of the pitch deck, the primary job of the pitch deck, is to get you past the first meeting and the first interaction. Okay. So with that, and I will keep this session very brief, because the motto of this entire session is to be precise, clear, and to the point. Okay. So I'll present my deck. Soma, I am not able to share. The host has disabled participant screen sharing.
Yes, requesting Neha if you can give him the sharing rights.
Yes, I've done that now.
Tanuj, you should be able to share the screen now.
Okay. Okay, so I mean, in a pitch deck, as I said, that there are not more than 3 minutes a person can hold its attention. I mean, so whoever is listening to you will lose his attention in the first 3 minutes. So whatever important or the most important part you have to say in the first 3 minutes. I mean, just that's the golden rule. Whatever you say after the first 3 minutes is not going to get registered and will be forgotten. Okay. So the very important things should
Anuj,
be.
can you go full screen? Sorry.
Yeah.
View full screen.
Yes.
Sorry about the interruption. Yeah, go ahead.
Is it better now?
Yes, good.
Okay. So, I mean, whatever important things you have to say in the first 3 minutes. And at the end, you have to summarize the most important things you want to convey, and what you want the investors to remember. Okay. So let's begin. So of course, I mean, it is important to have a good, well-formatted pitch deck. I mean, that's important, because it's the image of the company which you are creating. Okay. So make sure your PPT is well formatted. I mean, it need not be very precisely, I mean, it need not be done to the level of a artist, but you should make sure it is clean, and it is clean and well done. Okay. So there are the first 3 things which are important is, number 1, that what is the problem you are solving. Okay. I mean, why are you, what is that you are trying to solve? Okay, and we say that for NIAM, we say it in a very plain language, and you should do it in a plain but precise language. That NIAM Innovations is developing an implantable lens to give spectacle-free vision to patients after their cataract surgery. Simple. I mean, it has to be precise. You should not say that we are trying to save the lives of 100 million patients. That's vague. I mean, okay. So you should not do that in the first 3 minutes. Just be precise and be very clear that if you are making, for example, if you are making a drug, let's just say that we are making a drug for this disease. Okay. And then secondly, you have to tell them, okay, that this is the problem. How are you solving this problem? Okay. So we explained to the investors that we have developed a technology platform which consists of 3 important intellectual properties consisting of shape-changing material, instrumentation, and manufacturing process. And using that, we are creating a lens which can be customized using light for each individual patient. Okay. So that's the second thing we say. I mean, it's not necessary you follow the same flow, but it is important to convey the important things in the first 3 minutes. The first is the problem. Second is your solution. The third thing is how big is the problem. I mean, you can either say how big is the problem. Okay. I mean, or so you can say how big is the problem, or you can tell what are the different products you have in your solution pipeline. Okay, either way is fine. I mean, we sometimes change either way. Okay, so in that product proposition, you have to give the exact, I mean, in very precise manner, you have to tell them what are your different products you can make using your technology. Be very precise. That our lens, in case of NIAM, we are making 2 products. One is a lens eyesight which can be implanted, which can be customized to each patient after implantation in the eye. And the second lens is the eSight lens, which can be customized pre-operatively, I mean before the implantation for this particular patient. Okay, and with this introduction also explain, I mean, why this product is important. Just 1 or 2 lines, not too much. I mean, the most important lines which you think are important and which makes this product a unique product, just include those 2 lines in this introduction. Don't I mean, explain too much. Just something very brief and basic. I mean, precise and brief, not basic, but precise and brief. Okay.
Tanuj, do you want to go through that sentence in developing countries like India, because that's your sentence, right?
Correct. So what we say is, like, in developing countries like India, where surgically induced refractive errors are large due to the chosen surgical technique, poor eye measurements, or surgeon error, these errors can be corrected after the surgery in a 2-minute non-invasive process to give spectacle-free vision to patients. So no scientific jargon, but we have communicated what this product is supposed to do. And it is important because we know this line is important. So, I mean, make sure you know what you are speaking is important, because the investor will go back and see, I mean, whether it is important, whether the product you have shared is unique or not. Okay. So then you can maybe show about the product photos, because it is very important to have a physical, either a video or a physical demonstration of your product. I mean, or a photo of your product which shows what it is being made. Because see, I mean, you don't expect everyone to know how an intraocular lens looks like. Okay, so either include a product video, small product video, or a small, I mean, a photograph of the product in the presentation. Okay, then you can, after this, once you have established this, you should tell them what is the market size. Okay, because sometimes many investors are afraid of investing into solutions which do not have large enough market size. Okay, so investors have, so this is something very important. investors care about three things. Number one, is your solution unique? Okay. Number two, is the market big enough? Okay. And number three, are you capable of doing it? I mean, is your team capable of doing it? So you have to make sure that you have addressed these three things of the investors, which every investor has wants to look in the first 3 minutes. Okay. So the next slide, we say that, okay, we put the exact value proposition of NIAM. That NIAM, sorry. That NIAM is providing a fully customized intraocular lens, providing superior visual outcomes in a safe way. We are pricing for affordability, and we have an experienced team with history of developing and commercializing 3 innovative intraocular lenses in the past. Okay, so you make sure that you address these 3 questions in the, I mean, these 3 important parameters or questions of the investors in the first 3 minutes. That your product is unique, your market is big, and number 3, that you have the capability to execute your your vision. Okay. Then after the first 3 minutes, you can also tell the investors about your market size, how big, how, at which stage are you in the product development cycle, what is your business plan, and how much time will it take for you to start generating revenues or break even, or whatever is your business plan. Just be brief. Just in 1 page, just write it down. I have not included NIAM's business plan here because it was confidential, but I have kept a placeholder here. So make sure you include a brief outline of the business plan. Is your business plan that you want to enter the market yourself, or you want to do an acquisition, or want to do a licensing? So just be brief and very precise. Okay. So before you write that, before you tell your business plan, you have to be sure of yourself that this is your business plan. And it is not necessary that you have to choose one way or the other. Like, it is not necessary that you choose either licensing or acquisition or a revenue, marketing the product ourselves path. If you're not clear, just write it. Don't you should be when you write it, you should be at a stage at which you should tell them that, okay, I will be deciding it later. But don't confuse the investors. Okay. Then the other important thing to include in a pitch deck is you have to show them the money. You have to show the investors the money. This is a very, very important part. Even if your product is unique, your market is big, and you can execute, they are not sure what is the exit they could get, or how big your company can become. Can it become a unicorn? Can it become a decacorn? Can it become a few $100 million in valuation over the next few years? You have to, it is very important for the investors to know how much you can, how much your value company could be valued. Okay. So you have to provide comparables in at least one or two slides in the investor deck. You have to provide them with companies similar to yours or comparable to yours, who have raised money, or you have done an IPO, or have gotten acquired, or have made huge, or no, they have had huge run rate, or have huge customer success, or you should show them that there is a growing market and there are new customers being generated. It's a new market. So you have to show them that, it's something big and there is a lot of money in there. Don't be shy about speaking with money, about money. Okay. And you would need to do some background work to put up that slide. Okay. So in the last, okay, you should also tell about your team. So we have a great team, and we explain about our team, and make sure that people understand that our team has previous experiencing in developing such products, and we have been working, we have persevered for several years for developing this product. Okay. So that's it. If you include all these points, in a precise and a brief way, this slide deck should not go beyond 10 to 12 pages, maybe 15 pages, but not more than that. If you want to include some traction, that you should do. I have not included traction slide here because of the confidentiality issue, but you should include a traction slide. Traction means if you have raised some funds in the past, or you have some customers, some big customer names, or you have some great backers backing you, in terms of either advisor or mentoring, something like that. Traction is also important, but it is not the most important thing. So that's it. If you include these things, this slide deck will not go beyond 15 minutes.
Yeah. So Tanuj, if you don't mind, can you tell us your elevator pitch?
Okay, so elevator pitch is okay. We are a kind of a different, I would say, slightly different company, a biotech company. We have a slightly longer elevator pitch. Okay, but I'll nonetheless recite it again.
Give it a shot.
Yeah. Yes. It is important to have this recited. So NAYAM is So cataract is one of the most important age-related disorders of the eye, and the only treatment for cataract is replacement of our natural lens with an artificial intraocular lens. Current intraocular lenses leave mismatches in the vision of the patient, which is currently corrected by the patients either by wearing spectacles or by undergoing a LASIK surgery or a laser surgery. So NAYAM is developing the world's first patient customized intraocular lens, so that these patients don't have to depend upon spectacles after their cataract surgery. And that is our elevator pitch. But we have found out that elevator pitches sometimes, they have not been very useful to us because it doesn't give the, I would say, the depth or the uniqueness. Maybe the uniqueness, but it doesn't give the depth and the overall information about the company. So what we instead do, whenever we get introduced to an investor, we make sure we have at least 1 or 2 minutes, a couple of minutes with him, and explain him at least what we are doing. Or if we are writing an email to the investors, we make sure that we follow with the pitch deck, we do write a email with a explanation of what we are doing. Just briefly, like let's say 10 lines in the email, that this is what we are doing, this is the technology, and this is the money. Show them the money. That is important. Okay, showing them the money is important. So yeah, so I'm sorry, Dr. Premnath, we don't have a
but you didn't talk about your team. You didn't talk about what you have achieved so far and so on, right? In your
right.
So maybe you do it in your email, but it's nonetheless an elevator pitch only, right? Even if it's in an email.
Correct. That's correct. So we take at least a minute or two to explain what we are doing. So if I have to give that pitch, I would not call it an elevator pitch, but if I have to give a pitch, so yeah. So NAYAM is developing the world's first customized intraocular lens to give spectacle-free vision to patients. And our team consists of people who have developed and commercialized 3 intraocular lens families in the past. And we have currently completed animal studies, and we will be completing human clinical studies in the next 2 years. And we have raised this much X amount of money over the past 4 years, over the past 5 years. And we have a granted patent for our technologies. And our team consists of globally renowned professors and business development executives who are well known in the industry. This is what we usually explain to the investors or pitch to the investors. This usually catches their interest, and this usually catches them. This has never happened. This has never happened that we haven't gotten a second meeting with an investor. So
okay, so there are some questions, so let's go to those. Okay. So Harshish has asked, how long would it approximately take you to present all this with sufficient details?
So this pitch, what you just saw, was presented in 5 minutes to the MedTech Innovator Program, which is a global program, and we were selected in the top 10. In the top 10 among 600 companies all across the globe. So, I mean, this pitch deck worked. So this is a 5-minute pitch deck.
Okay. And another question here is, will you change your pitch depending on the type of investor?
Yes, I would do. Before writing to any investor, I would basically look what are the types of investments they have done, and I will show them the money. I will first of all find out at what stage do they invest. I mean, are they very early stage investors? I mean, are they investing 1 or 2 crores? I mean, what is the ticket size? Is it 1 or 2 crores? It is 10 crores or it is 50 crores? So, I mean, you have to make sure of that before you write to the investor, and you have to, I mean, you have to show them the money.
One other question is about what difference did you see, major difference did you see between making presentations for grant versus investment?
Grant presentations are very different from investor presentations, because in a grant presentation, you are presenting to a technical committee, and you have to emphasize and focus on the technical aspects, and more on the technical aspects and on the utility of the product. They don't want to see, I mean, usually they are not very much into seeing how big a economic opportunity can it be, but they are interested in seeing how big is the market. And vis-a-vis, the difference between an investor deck is that you have to show them how great of a company can you become. So grant deck typically are focused how great a product can you make, or how great is your product. Investor pitches are typically how great a company can you become.
Another question is, if we have confidential information in the pitch, do we sign NDA with investors before presenting, and do they sign?
So we do not, no investor signs NDA before, I mean, in the pitch, but when the discussion goes from the pitch to a detailed discussion, we have always signed NDAs with investors. I mean, it is a myth when investors say that they do not sign NDAs. All global big billion-dollar investors, billion-dollar under management investors sign NDAs, and we have signed it with them.
Yeah, but that is later. Only
Yes,
after they're interested. They're
deck.
not going to sign in the beginning. Yeah.
No. Only when you are disclosing confidential information, or they are demanding confidential information. Only then, and only then you should ask for an NDA. But don't ask for an NDA. I mean, if your information you're sharing is not confidential, I mean, just don't do it just for just for the sake of it.
Yeah. How do you structure your ask from the investors?
It's very ask, I mean, how much money we are raising, right?
Yeah.
Yes. So it's very simple. So typically investors will not fund you. I mean, they might also, but typically, I mean, in general, typically raise money for the next 2 years. So whatever money you want for the next 2 years, plus some buffer, let's say 20% buffer, you should ask from the investors. So here is the tricky part. I mean, if in the next 2 years you are only seeking, let's say, 3 crore rupees, don't expect to get 100 crore valuation. Okay, because typically investors have a minimum holding. I mean, minimum percentage of equity they would want in a company when they invest. So just be prepared. I mean, just raise funds accordingly. Okay, I mean, don't raise too low or too much in one single round. So typically, I mean, raise for 2 years and plus.
So you're saying that your ask will be structured to say that I want to do this in the next 2 years and I need this much money. Do you specify? So you're looking to raise this much money, right?
Yes.
But do you specify any instruments? Do you specify anything else, like do you try to say what kind of valuations you're expecting, or what instruments are you're open to? Anything else that you specify when you do your ask?
So with the ask, just include the valuations or the valuations of the company who are similar to yours and were at your stage. Just include those valuations. Don't include your number. What is the valuation you are seeking? But include the comparable valuations of other companies similar to yours. So when you get to the next discussion, I mean, there you can probably discuss the kind of valuations you are seeking for this round.
So you will provide information on comparables as
Right.
information, but not state your valuation explicitly, because that has to be negotiated at the end of the
Correct.
day, right?
Correct.
So, and will you do that in your first pitch deck, or you'll do it later?
So we have to include the comparables information in the first pitch deck. See, the problem with the deep tech IP driven biotech companies is investors do not typically understand the valuations biotech companies can achieve at the various stages. I mean, either at the stage of clinical studies or animal studies or preclinical. So you have to show them the money. That is very, very important.
There's a question also on how much time should one spend on explaining the problem.
So in a pitch deck, a pitch deck is usually 10 to 15, maybe 20 minutes. When you get the next discussion based on the pitch deck, you should explain. I mean, in whatever, because you will get more time with the investor. So explain to him what is the product.
Yeah, so you should be as brief as possible and precise,
Yes.
but don't need to go on and on about the problem definition, because there should be another opportunity to explain it, right?
Correct. In the pitch deck, you have to be in the first 3 minutes. That's the golden rule. In the first 3 minutes, you have to say the most important things. Listen, I mean, so investors care about your company. So company consists of product, your team, your market, and the money. So you have to explain these 4 things first in the first 3-4 minutes in the pitch deck.
Yeah. Is the money part, showing the money part, also important when you're pitching to impact investors? And in fact, you have an impact investor on your cap table.
Yes. I mean, showing the money, along with the money, you have to also show the impact if you are specifically targeting impact investors. You have to also show what is the impact you would create on the population. So our target is simple. I mean, our vision is simple, that we want to create novel and affordable, the best world-class technology at an affordable price. So that is our vision, simple and clear, that we want to provide the best premium technology at a affordable price to the patients, so that everyone can afford it.
Yeah. So what? Just to reiterate that, you have to talk about money, but in impact investors case, you have to also talk about impact, right?
Correct.
So the money part is there for everybody, all investors of all kinds, right? That's the first bottom line that one is. Regarding your ask part of it, just to repeat, somebody has requested is, so what you were saying is that in your ask slide, you would basically state that I plan to accomplish this in the next 2 years roughly. Okay. Right. And to do that, this is the kind of money that I need. Right. And whatever you want to accomplish, hopefully will have goals which are substantial for those 2 years, and also helps you hit a valuation milestone, I suppose. Something that will show that you're onto it. Right.
Right. So in that ask page, write the amount of money you need, write the goals you would want to achieve, and just give use of funds chart, like 10 to, let's say 30% on human resources, 20% on capex, 30% on marketing, sales or marketing, whatever. Just give that brief chart and just follow that. Either before this slide or after this slide, you should show them the comparables who have
so that means basically that you will say, look, here are 3-4 companies in the same space. They have recently raised money of this order. Okay. This kind of numbers of amounts, maybe if valuation is available. Okay. which basically indicates that there is a lot of investment interest in that space, and that there are certain indicative numbers of how much is being invested at what kind of valuations, right?
Correct.
That's what you're trying to hint, but you're not trying to tell them
Right.
this is the valuation I want, because
Correct.
you want to keep it open for negotiations.
Right. Don't tell them this is the valuation you want. Just tell them, you have to hint them, you have to make them interested. And it is sometimes the valuations will not be available. Okay. So just tell them what is the, if some company in your area or in your product area has exited at a large valuation. Just give those numbers, that this is the kind of exit potentials you can see.
Okay. Yeah. While pitching to investors, you also talk about exit strategy for the investor. Is it necessary?
It is important, but sometimes you have to give a direction where you are headed. Okay. I mean, for example, you have to give a direction that, okay, this company is heading. I mean, suppose your company wants to head towards a licensing route. Okay. Or maybe your preference is that you want to start selling in the Indian market. So you have to give your preference. Here, I mean, it's a tricky slide basically. So you have to be clear that before you ask big money from the investors. For small round, it's fine, 1 or 2 crores. People don't expect you to be very adamant or sure about it. But when you are asking for a larger raise, let's say 5, 10, 20 crores, you of course have to be sure about your business model.
Yeah. You also talk about SAM or beachhead markets in the market slide, or talk broadly about the market size in the first pitch?
Yes, you have to talk about the total addressable market. You have to talk about the what is the total volume you can expect. I mean, you have to talk about that. SAM, TAM, NAM, everything has to be spoken about, but in just one single slide.
Yeah. Okay, great. So I think, Tanuj, we've got a lot of questions also from people, and you've addressed them. Yeah, but I suppose we'll get another occasion to see more of your slides. You deleted a lot of content. So I have a complaint about that. Anyway, that's fine, no problems. We'll move on now. Thank you so much, Tanuj, for volunteering to speak and tell us about your insights. One last question I want to ask you is, how many people did you connect with for the last funding round? Okay, what were the odds of getting how much what is the logistics of fundraising that you had to plan for? That's something which you can tell us briefly.
Right. So it's fundraising is a process. So it's like a sales process. You have to get introduced to the prospects, and you have to basically keep the process on. Okay. I mean, just like, for example, in the sales process, you have lead generation. So first you generate leads, then you contact those leads, then you nurture those leads, and then finally a deal might happen. Okay. So here also it's the same process, that you generate leads. You have to first collect what all investors can invest in your company. Okay. Then you have to email or get introduced to them, either through a connect or a contact or cold email, whatever. Then you have to nurture them. You have to send them email. You have to connect with them, talk with them. So typically, we connected with probably about 35, 40 investors, but globally the number is that you have to get introduced to 70 potentials. I mean, after the lead generation, that 70, there could be 70 interested investors, and when you have written to 70 interested investors, one of them could invest. So that is a general typical statistics.
Okay. And, I remember that you have been very good at connecting with leveraging your alumni network and so on and so forth to get introductions, meet people and so on, especially connect to other investors, isn't it? I mean, that's you leveraged your alumni network quite well.
Yes. So as far as possible, do not write cold emails, because those typically get ignored or get lost. So get an introduction. Use your alumni network to get an introduction. Okay. So ask your alumni, can you introduce me to this investor? And with that ask, just send him your email and the pitch deck, so that it's easy for whoever is doing the introduction.
Yeah, Tanuj, there were a couple of questions on YouTube, so let me take that up also. Sorry if you don't mind, just 2 other minutes. And sorry, Ashwin, just give us a couple more minutes. Okay, so one is at the earliest stages, when how do you convince investors when you're at the earliest stages on, because very often everybody is looking at it post further development. So what about your earliest funding? How did you go about convincing your investors that what you were doing was worth doing and that it's worth investing?
So at when you're raising,
sorry, there's some disturbance. Just 1 minute. Yeah, go ahead, please. Yeah.
So when you're raising a smaller round of funding, let's say less than 2, 3, 4 crores, 2 crores, 3 crores, okay. So you have to raise the money on the potential, like what is the potential of your product when it is developed, and the potential of your execution, and probably an exit. I mean, showing them the money basically. I mean, that's what we did. I mean, we showed them the potential, we showed them the impact, and we showed them that we have a team which could execute this.
Yeah, so in the early stages, since you don't have traction,
yes,
you're very often telling the story of a future.
correct.
And you always want to make sure that your story is as reliable as possible. So you keep collecting things which will make your story as reliable as possible.
Right.
And at some point, somebody will get convinced, right? So
exactly.
I suppose that's how it works, right? So it could be team
process.
members, it could be board members, advisors, some data,
correct.
some funding, some recognitions, all of those. So you keep adding on to your kitty to get it
correct.
as convincing as possible, right?
Correct. That's right.
Okay, great. So I think with that, we will close. Tanuj, thank you so much for taking the time out. Okay.
Thank you very much.
Yeah, thanks for volunteering to do this. All the best to you, and we hope to hear a lot about your company in the future as well. Okay.
Thank you. It
So
was my
thanks.
pleasure.
Yeah, thank you so much. Okay, I think we'll stop here with Tanuj, and Tanuj, you can leave if you want. Okay. We'll move on to Ashwin now. So I'll give it back to Shoma to take it ahead, please. Ashwin, we are running about 15 minutes behind. I hope you can.
No worries. That's fine.
Okay, great. So Ashwin, you're free to do it whichever way you want. Okay.
Okay.
You can talk about we hope you can give us some glimpse of how actually the process works and what your deck and your elevator pitch would look like. Okay. But anyway, Shoma, over to you.
Yeah, thank you. Welcome, Ashwin. Let me introduce you formally as well. So Ashwin Shankar is the founder of Battery Pool. He holds a BS in Electrical Engineering from Purdue University and an MS in Electrical Engineering from Stanford University. He has experience in hardware development for space environments at Stanford University in collaboration with NASA and energy industry at Schlumberger Corporation in Houston, Texas. He also has experience in building a non-profit in India that works on technology policy in the Indian ecosystem. So Ashwin has been with us from very beginning of his journey when he was an entrepreneur in residence fellow. And then over the years, he has been doing multiple iterations in his business plan. And now I think he's a renowned company in the investor community. So anybody I meet, they know Divish Mobility very well. So with this introduction, I welcome you, Ashwin, and request you to share your insights on building your pitch deck.
Thanks, Shoma, for the kind introduction. So I'll do this. I'll share my deck. I'll go through this. So similar to what how Tanuj presented. Before I start, I want to sort of let you know there's a few differences between my business and what business Tanuj is in. Right. So in my case, we are in the electric mobility space. Right. So we're building charging solutions for electric vehicles, and this space is it's a space which is constantly evolving. It's something that you hear about it a lot in the news, and things change almost on a daily basis. Right. So the market and a lot of the technology is not very well defined yet. So you'll see that in my deck that there's a few slides which focus on various scenarios and how the market could evolve. nothing very definitive, unlike Tanuj's presentation. The other key difference is that we are not as deep tech as NIAM Innovations, right? So we focus on hardware and software, but it is not as heavy in terms of IP as some of other startups in VC and as some of the startups that you guys are working on. So with that, I think I'll jump into my deck, right? So, you want to open with giving an introduction about the company, one line about what is it that you guys are doing. So this line can be very broad or it can be very specific. It's up to you. This is a line that will stick to the investor's mind when he goes home after listening to your deck, right? And then, like I mentioned, right, since in this case the market is still evolving, what I talk about is that where adoption of electric mobility is happening first, right? So this slide sort of talks about the fact that EVs are taking off in a fleet and commercial vehicle segment, ride-hailing, delivery fleet, shared mobility. This is a segment where we are seeing an adoption of electric mobility. And as you'll see in the following slides, our solutions are, we start by focusing on this segment first. So this talks about why we're focusing on this segment. And then coming to the challenges that are faced by this segment. So when you run an electric vehicle in a fleet or commercial vehicle use case, these are the challenges that one would face. This is similar to your problem slide that you might have on your deck, or the problem slide that you might have seen on Tanuj's deck. And once you have the problem slide, the next slide, I like to follow it up with the solution slide. And the solution slide, the solutions or the features of your product need to speak to the problem slide that you have, right? So the solutions that you're talking about need to talk about how they're addressing the problems that you have talked about on the previous slide. Once you have the solution slide, then you talk about the USP, right? So solution slide, there might be other players in the market as well that are doing something similar to what you're doing, but how are you different, right? So this is a slide that a lot of investors care about. They want to see how you are a differentiated business. And so what are the sort of the key features or the key aspects of your product that make you differentiated from your competitors or that go as your unique selling point, right? So I've talked about it from an overview standpoint, and the next couple of slides are focused on each of these USPs. So the first slide talks about this first USP, which is an intelligent brain and customizable body. It's not important in terms of what it is, but I talk more in detail about this USP. And then I talk about the second USP, which is the fact that we are software driven, and the product that we're making is a software API first product in the market. And then this slide, which is, I think, probably your most important slide, which is why is your USP, why does it matter to a customer, right? What you've talked about your differentiators, but what is it about these differentiators that will make a customer buy your product or put money in your product, right? So we talk about it in the context of existing, the existing swapping ecosystem, existing battery swapping ecosystem, and how the battery pool product is differentiated from the existing swapping ecosystem. And in these, what we sort of delve deeper into is why is it important for these customers that the features that we have, what impact does it have on the end customer's life, right? So either it makes their operations easy, it helps them save money, it helps them save time. So you want to talk about what your USP, what sort of impact it actually has on your end customer, and why, and that impact eventually is what will lead to customers giving you money. So I think this slide is, in my mind at least, the most important slide that you need to have on your deck, which is the why is your USP important to the end customer. Right. Then on the next slide, I talk about my business model and unit economics. Right. So at an early stage, some of you might still not have figured out your pricing, but having a rough idea of what your unit economics are going to look like. In our case, we do an upfront hardware sale, and then there's a SaaS fee that we charge on a monthly basis. So I talk about what my margins are on the hardware sale, and then I talk about what the monthly SaaS fee will be. So investors would like to understand what your unit economics look like, because eventually, as you scale this is really where the money is in the business. Right. Then I move to the traction slide. So again, this is an important slide, especially if you've already hit the market. this is something that investors like to see in terms of, this is a sort of a solid data point, right? If someone is putting money into your company, they'd like to see these data points, and this traction is probably the best data point that they could get. So you can talk about when you launch this product into the market and what traction you have, in so many months. And you also want to talk about if you have purchase orders, if you have an order pipeline, to show how fast or how much you can grow in the next few months to a year or two. And this will give them a lot of confidence if you have good traction numbers in terms of believing that this is a business that is growing very quickly and it's on its way to scale up and it's worth investing in. Right. Then I talk about competitive landscape after the traction slide. So this is more about comparing your solution with what else is available in the market. So you can look at direct competitors. In our case, our direct competitors were swapping station OEMs, and you can also look at substitutes. So what people were doing before battery pool and before other swap station OEMs, and how you're different compared to both substitutes as well as direct competitors to your product. And so you can do them in the form of listing out features. There are many ways of doing this, but I like to list out the features and show in terms of yes, no, or if there's a number that where you can benchmark against the competitors, you can show that number as well on a table like this, right? And then moving on to the market, right? So this is like probably at an early stage, this is the most important, or maybe at most second most important aspect of your business that investors would be interested in, which is how big the market is. Remember that bigger the market, the more lucrative it is for investors. So you want to show at least like a $1 billion market. If not now, in the future, you want to show that this is likely to grow into a $1 billion market, and in which case your business is also likely to grow if you are building in that market. So in my case, because we are focused on the fleet segment within electric vehicles, I start with talking about what the market size is just for fleets. Right. So again, in my case, because this is a evolving space, there may not be too many vehicles being used, electric vehicles on the road today. But I talk about how this is going to change in the next decade and how fast this market is going to grow in the coming 10 years. Right. And while the focus for now is on this niche, the vision I've sort of also tried to paint is that we want to eventually play in the broader EV segment. So the broader EV segment comprises of not just fleet EVs, but also non-fleet EVs as well as personal electric vehicles. So the approach I've taken is to first focus on the market that I'm building for, but eventually show them how big this company can get. Right. So the bigger you can paint that picture, the more lucrative it will be for them to invest. So I talk about how big the broader EV segment is going to be and how we plan to play in that broader EV segment. Right. So the first year, the focus again is on the fleet EV market and building for the fleet EV market. But going forward, year 2 onwards, year 4 onwards, we would start looking at non-fleet commercial electric vehicles and personal electric vehicles. Now, in these 2 phases, phase 2 and phase 3, since this is an evolving space, we don't know what's going to happen, right? My guess is as good as anyone else's. So what I talk about is that I talk about it in the form of scenario A and scenario B in terms of how the market will evolve. In scenario A, I talk about the market evolves a certain way and how we would play in that if the market evolves in that certain direction. In scenario B, again, similarly, like how else the market could evolve and how we would play in that scenario. But this is basically to show the investors that you've thought through in a fast evolving market, you've thought through how the market could evolve and how you could play in those scenarios and how you have your bases covered. So tomorrow, if things change, then you are still you still have that opportunity in that market. You're not caught flat-footed. Right? Then after talking about the market, I then come to what my 18-month milestones are going to be. So coming back to the metrics, the traction, tying that into how you see your business growing in the next 18 months. And this slide from you may also want to include your financials on this slide and talk about what your expected cash deficit is going to be while you try to achieve these milestones and what you're really looking to raise money for. Right? So I think Tanuj mentioned 18 or 24 months is the range for which you want to raise money. So in this slide, I've talked about how what my milestones will look like for the next 18 months and what my cash deficit will be for which I'm raising money. And then I talk about the team. So, here brand names do matter, whether you like it or not. So you sort of want to make sure that you put out, if you have a strong pedigree or strong brand, you make sure you want to put that out. And also sort of talk about why you're the best team to execute this business and to build this product out. Right. So all aspects that you talk about here need to tie into the kind of business that you're in. This is something that will give investors the confidence that yes, this is the right team to build in this space and to build this product out. Right. Then I talk about past funding. So I've combined grants and equity investment in this, but past funding in terms of how much money has gone into the business so far, so that investors are able to then look at where you are as a business and tie that into how much money has actually gone into the business. So investors don't like to see too much of cash burn also, and they also don't like to see businesses, at least investors at a later stage will not like to see businesses where they're very early stage. So you want to sort of talk about this in the context of how much money has gone into the business in various forms. It can be grants, equity. You can even put your own sort of personal money in this at an early stage if that is significant, right? And then I tie that into my final ask. So this is the equity investment ask that I had. So this ties into my 18-month milestone that I'd shown a couple of slides ago, and what kind of investment amount I need for getting to those 18-month milestones, and breaking that down into the various components. So you want to sort of have a financial projection available with you, and then talk about how much money is going to go into salaries, how much money is going to go to product development, operations, how much money you need for working capital if that's the kind of business that you're in. But you want to sort of leave the investor with this slide so that they know how much money you're looking to raise at the end of this pitch, right? And then you conclude with your contact details and wrap up.
Ashwin, how long was this presentation? And perhaps you used it recently, some time back, so you might have an estimate.
Yeah.
How long did you
I
do
used
it
for my latest. We raised a seed round a couple of months ago, and this deck took me about 12 to 15 minutes to get through.
Yeah.
So,
but your deck, the style of slides has less content per slide. So probably, although you are at 20 slides, you could do it in 12 minutes, right?
Yeah, exactly. So I don't think the number of slides matters. What should matter is how long it takes you to get through that presentation, right? So you might want to articulate your thoughts over multiple slides, which is totally fine. But as long as you keep it brief and concise in terms of delivery, you'll be fine.
Yeah. So Ashwin, while some other questions are coming in, I'll request people to type in their questions. I just wanted to ask you about, in the very early stages, there was always this issue of, in the kind of domains like you are in, there's always this uncertainty about when the market will take off, right?
Yeah.
Okay. And that was something which we discussed, grappled with all of that.
Yeah.
A lot of the deep tech guys also have the same issue, right? They don't know when sometimes that's going to take off, right?
Yeah.
So what were your earliest experiences with investors? Were there any do's and don'ts that you want to suggest? Some things which you learned along the way just by talking to investors and not, you didn't realize it earlier.
Sure. Yeah, no, absolutely. In fact, this is something that we still grapple with in terms of everyone knows that the future is electric and electric mobility is here to stay, but it's unclear in terms of when is the right time to invest in companies in the electric mobility space. Right. So this is a problem that we still grapple with, but what you can do is, and what I've learned over time is that you can give them data points, right? So you can give them data points or, indicators that hint at how this market is going to evolve over the next 5 years, 10 years, and why the solution that you're building is necessary for this market. And so if you sort of show that, and if you're clear about that, I think that's something that investors will buy into. And a lot of investors also have different risk appetites. So some investors will be bullish about early markets, even before others are. So when you have that conversation with them, you get a sense of how bullish they are about certain markets, and basis that you can have that follow-on conversation. But at an early stage, team and market are two things that investors really care about. In some cases, with some investors, they're sort of market first and team second. What they think is that the team doesn't matter as much as long as the market is like a large market and a fast-growing market. So those kind of investors, you obviously want to ensure that you're talking to them at the right time when they are bullish about these markets.
Anybody has any further questions? They can.
Sorry, Shoma, sorry, I was speaking with it on mute. Okay, so I wanted to request Ashwin to also talk us through the logistics of investing. Okay,
Sure.
In terms of the number of people that he might have connected with, and finally, what were the odds of success? Also, how did you select who to speak to?
Yeah.
How did you get your connects? What was the preferred way to get to investors? And what are the different ways you use to reach out to different investors, and what worked and what did not?
Sure. So again, like I think Tanuj had talked about it perfectly, where it's like a sales process. So you need to create that pipeline of potential investors that you want to talk to. And how you create that pipeline is you go and you do research on Crunchbase, on Traction, on these kind of platforms to try and understand which investors have invested in companies at this stage. Right. So the check size that you're looking for, you want to sort of look at which investors in India have invested in companies at this stage. Then you want to filter that down further into which investors are likely to be interested in companies like yours, right? So, for example, I would never go and talk to an investor who's traditionally only invested in like a consumer internet kind of startup. That's not the kind of investor that I would want to talk to. So you want to do your homework in terms of understanding which companies these investors have invested in. If you go to their website, if you try and reach out to their analysts, many of them will tell you what is it that they're thinking about internally when it comes to the space like electric mobility, and where they're looking at placing their bets. And basis that, you can then have a more targeted approach towards getting in conversation with these investors. Once you have a targeted list ready, then again, like Tanuj mentioned, I think using a network works best. What we've realized is that using your network, your mentor's network, your team's network to try and reach out to these investors works better than trying to cold email them. Typically, when you cold email them, they'll sort of route you to an analyst or an associate, where then the conversation becomes more about just sort of they're just there to listen to what you're saying, and it doesn't lead anywhere. You want to try to get the interest of the folks higher up when it comes to who are actually responsible for making the investment decisions. So using your network to get in front of them, I think is very, very important. Cold emails have worked on occasion for me. If you write them properly and if you like structure it well, cold emails do work as well, in my opinion. But as far as possible, try to use your network to get in front of such folks.
I think there are a few other questions as well. I think Bevav has a question where he says that what are the components you do not present in the first pitch deck?
That's a good question. What are the components you do not present in the first pitch deck? So if you are building a product and there are sort of technical details in the product that are necessary for showing that your product's USP or differentiation or whatever, that's something that you may not want to delve into in the first call. Generally, product details, right? So product details, as engineers, we tend to talk too much about our product and too much about the technology that has gone into building that product. But that's something that investors may not care about in the first call. it's a deep tech product and if the technology is a critical component, then on the second call, they might ask more details about the product. And that's where you can bring that in. You also maybe don't want to talk too much about your, when it comes to your market and your go-to-market strategy. You can talk about it broadly, but going into details about the fact that we have 100 leads or 200 leads, and this is how we are trying to get to them. That's something that, at least for an early stage startup, you can let that go, and you can talk about that on the next calls. The point of the first call is to get the investor interested in having another call with you. So you also don't want to give out too many details. So in fact, I think Dr. Premnath, we had a mentor who had told me this, that your first pitch is like going on a date where your point is to get them to go on another date with you. It's not to give them all the details and bore them out of their minds, right? So you want to be brief and concise and get them interested to have another conversation with you.
Yeah. Ashwin, so many a times we get to hear from some of the mentors that you should start with something which can connect with the investors, in a shocking story or very surprising fact. Do you really do that? Do you believe in that, or you believe in directly going to the basics of your business and not really have those kind of wastage of time to start with?
Yeah, so it depends on that story, right? So you also don't want to sort of fabricate a story. It might come out as being entirely sort of contrived just for that pitch, and investors can sense those kind of things. So you don't want to first make an impression of being fake or trying to make something up just for the sake of the investment. But if it's a genuine story that has happened with you, then you probably want to bring that up and you want to talk about why you're doing what you're doing, right? So I think it's important for early stage investors especially to know why this team is doing what they're doing and what is the insights that they have to the problem that will help them build a big business in this market, right? So if that story or there's some incident that's happened to you that has given you some unique insights, then that's something that you should definitely narrate to set context for why you're building what you're building. But don't come up with a story or make a story just for the sake of the pitch or the investment.
Sure, thank you. So I think there's another question where Kunjpreet asks that, have you also tried to connect with international investors leveraging your alumni or university network?
Yeah, we did have a few interactions with international investors. So with international investors, the challenge or the opportunity, you can look at it either ways. And by the way, we have a couple of angel investors in one of our rounds who are from the United States, who came through my network. The challenge there is that they may not be completely aware of ground realities in India. So the insights that you talk about may not connect with them as much as folks here. And so when we talk about things like there's not enough space to recharge a vehicle, if someone who's never visited India, who just has sort of a vague idea of India being a fast growing market that has some traction in the electric mobility space, they may not be aware of this problem on the ground. So with international investors, that can be a challenge. But that being said, there are a lot of international investors who have networks in India who can help them understand better of what the market looks like, and they can use that network to better gauge whether the business is worth investing in or not.
And I think your particular problem was a little India-centric.
Yeah.
And therefore, you also probably made some strategic choices. Perhaps early stage investment, might be something which, as you said, the Indian investors might be in a better position to understand probably.
Yeah, exactly.
Right?
Yeah, that's a good point. So if your product is something that you can take global, and if there are investors around the world who understand your market and understand your product better than someone in India, then by all means you should try and reach out to them, find a way to network and connect with them, and pitch to them.
Yeah. And since you initially your initial focus is two-wheeler, three-wheeler kind of markets, it makes sense.
Yeah, for us.
Yeah. There's a question also from Harish on the question is, post-investment, how much are you held by your investors in terms of financial projections, especially your unit cost economics? Your market is evolving pretty rapidly and depends on many macro and micro factors. So, whatever you project, do people hold you to it entirely, or how does it work? Yeah.
So we raised our seed round recently, but I can tell you, like the pre-seed round that we raised, financial projections at an early stage make no sense at all. At this stage, you're sort of running experiments to figure out, where your product fits. If you're trying to validate in some cases whether it's actually solving the problem. You're trying to figure out your go-to-market strategy. So at this stage, financial projections, in fact, in my opinion, make absolutely no sense. But you want to have those financial projections with you so that you have a sense of where you're going with the money. So once you get the money in, you need to know what you're going to be, investing that money into in the business. If you are sloppy about that, then before you know it, your business will go under. So I think from that point of view, financial projections can be important, but I don't think at an early stage it makes any sense for investors to hold you onto a financial projection.
I think they probably assume that they should take it with a big pinch of salt.
Yeah, absolutely, right? absolutely. I mean, I think a lot of I heard somewhere that a lot of seed stage startups will all project that they're going to be profitable in like a year or 2 years, but most of that is never the case. It takes years for some companies to become profitable. So financial projections at this stage, in my opinion, make no sense whatsoever.
Okay. Now, how useful did you find your elevator pitch? And did it, because that is something which Tanuj said he didn't find very useful, but of course the caveat was he did use it in some of his emails directly, right, although it was not the elevator pitch the way we talk about it, but nonetheless. So did you have an elevator pitch, and did you sort of, is that something which you used somewhere, and did it open any doors or give you any opportunities?
Like where my elevator pitch was most useful was in writing those cold emails, right? So if I'm writing to someone who I've not connected with through a mutual connect, or for that matter, even with a mutual connect, if someone wants a brief introduction about what we are building, then this elevator pitch in that email is the best way for them to get to know quickly whether this is something that they'd be interested in taking forward or not.
Yeah.
So it's been helpful there. When it comes to face-to-face interactions, that if you try and recite your elevator pitch, it might seem a little bizarre. So you want to have that conversation like you'd have a natural conversation, as you would explain to any colleague or your family member about your business. But I would say like that was useful on email. It was not so useful when it came to face-to-face interactions.
Yeah, but even in face-to-face interactions, you need to remember what to say, right?
And sure. Yeah. So you want to keep those points. Yeah, you want to keep those points in mind. You want to keep those 3-4 points in mind that you want to make sure the person you're talking to remembers, and you sort of bring that up in that conversation. But it's not something that you want to learn by heart and just recite.
Yeah. Okay, great. So thank you very much. I don't want to, Shoma, is there anything else on YouTube or? Sorry, you're a little behind. We are a little behind, but I hope we have not eaten into any other plans, right? Shoma, over to you again.
Yes, I think that's about it. I think these are all the questions we had so far. So yeah, thank you so much, Ashwin. It was great actually to have you speak here, and sharing your insights was really wonderful. So yeah, look forward to listening more from you again in the future.
Thank you. Thank you for having me.
Thanks a lot.
Thank you.
Bye.
See you then.
Okay, so next we have Runal Dahivade from Peppermint and Robots. To introduce Runal, he is the founder of Peppermint Robots, an award-winning robotic company based out of Pune with customers across India and Middle East. Earlier, he had co-founded Karkhana, India's largest marketplace for automotive accessories, which was acquired by Topwheels in 2013. Runal holds BE in Mechanical Engineering from Visvesvaraya Technological University, Bangalore. So with this introduction, Runal, I welcome you and request you to share your insights and your story of building the pitch deck and probably getting those interactions going and getting the attention from the investors, customers, whatever you have been able to achieve so far.
Surely. Firstly, thank you so much, Roma. That's very kind of you to put it in those words. Also, quick shout out and thank you to Dr. Premnath to have allowed me enter this. I'll come to the
Yeah, thank you, Ronald, for offering to do this. And I must just tell in quick 2 sentences that, hello, can you hear me?
Yeah, we can hear you. Please go ahead.
Yeah, no, his computer is frozen, I think.
Oh,
Ronald's,
okay.
hasn't it? Ronald, can you hear us?
Think, yeah.
changed on how we present our journey. And that would be my first point of discussion today. Can you hear me?
Yes, Ronald, what happened is in between we lost you. Okay.
Oh, is it?
So
Is
is
this
your
better
connection
now?
stable?
It
It's
is
showing
now,
up
I
red
guess.
though.
Yes.
It's showing up red. So I'm not
Oh,
sure
is it?
how. So in
I'll
case you
try.
need to, you can cut off your video and go with
Let
just
me do
speaking.
that.
Okay.
Sure. Is
Yeah.
this better?
Yeah, it looks better now. So I was
All
just
right.
saying while you were cut off that, thank you for agreeing to do this, and also, sharing some insights. So in Ronald's case, I've just requested him to share his insights. And I think Ronald, you have some slides also, right? Which you plan to use.
Yeah, just a few,
go ahead.
just a very few. Yeah.
Go
I'll
ahead.
just share my screen as well as we do this.
Yeah.
Sure. So what I would like
can
to
you go full
cover
screen?
today. Yes.
Yeah, good.
All right. So what I would like to start today's chat is by sharing the importance of context setting. This is something I learned quite late, to be honest. Definitely not when I was building Karkhana, which was the first startup I had the opportunity to build with the co-founder, Harneet. Both of us were quite naive about context setting. We were so excited about what we used to do. This is something we have tried to build in our Peppermint communications. And I would love to show a couple of slides. The best policy thumb rule I use is, what if our audience is a child? What if it's a 10-year-old child? If we can convince a child about what we are doing, we are very certain that we are communicating loud and clear to the adults in the room. So as a housekeeping robotics startup, we want to set context on what is commercial housekeeping. And what we try to do is we help visualize the problem statement or the inefficiencies of how this world is. So what we do is we use these first 2 slides, which starts at this, to set context. All we are talking about is what is commercial housekeeping. All working places and public spaces across the world, all around us, are cleaned every day, be it airports, warehouses, industries, malls, offices, hospitals, museums. Everything is cleaned every day. However, that cleaning process and the workflow is highly analog, old school, and 100% manpower dependent. What we have also found that the whole context is global in nature, or it's very macro in nature. The way we clean our public spaces in India is the same way how it's cleaned across the world. The only variable would be probably the cost of cleaning. For natural reasons, the cost of manpower is different across different parts of the world, and maybe the sensitivity to cleaning, depending on how big the space is, what kind of tropical environment the country is in, and so on and so forth. So what I'm trying to share in these first couple of slides going back is to set context. I think it completely helps to first bring everyone on the same page that what are we talking about. The next I would like to discuss would be things about design. Every communication, especially a pitch deck, is the first sneak peek into the whole world of the startup, its team, its efforts for all these months, years. So we love to bring our aspects of design into it. Our robots are turquoise and gray. Our robots are quite minimalist in their industrial design. And we love to bring them through very simple, actionable, easy to understand bullet points. What we also do, and what I personally have learned to maximize, is never read the slides. The slides are there to give a generic idea. The right idea or the right approach I would suggest to members here is to talk about your actual truth. The authenticity has to come out from the words. And in this case, we do talk about what we are very proud about, which is our technology. It's 100% built in-house. It's done 100% end-to-end by us. We have no external dependence. And our robots are designed for different types of floors, which all leads to great efficiencies in manpower saving or man-hour saving, 100% accountable operations, and sustainable operations. What this does is it gives the context some legs. Good design, good representation gives good legs. We also want to go deeper into certain things, so there could be a slide or two extra about it. Like in this case, we do like to talk about our bespoke IPs, which we have. Our cleaning technologies, our navigation technologies are built by us, for us. So that is the second, I would say, pillar of our deck or our communication, which is great design. It has to be very clutter-free. It has to be honest to what you are doing. It has to attract some attention. I think as of 2021, with the number of screens we all look at, it's important to get that attention quite well. The third aspect I would want to discuss about is what is your key action area these days? What are precisely what you're doing these days? And what is this journey going into? Usually that's as a salesperson, I call it the call to action or the hook. What are we ending the whole narrative with? So in our case, I'm going to skip through the next few slides. It's this. This is our lineup of robots for 2021. And the extreme right is our most ambitious robot. This is our outdoor robot. We have been building this for the last almost 1.5 years, little less than that. And that will open completely new avenues for Peppermint globally. What we also are proud to share that we ship now machines within and outside India. Now, this is the building block for us as far as what are we doing? What is the number one priority right now for us? And how is that number one priority scaling up? It could be new technology. It could be new product. It could be new markets. It could be a great team, which is in the building stage. It could also be maybe something very specific. It could be unit economics or unit metrics. Whatever is that one big hook, I think becomes extremely relevant. What I would also recommend, another one of the learnings of Peppermint's journey for me personally is go into detail about some things which are hidden between the lines. In our case, it is the aftermarket support. We make these large robots, and it's important to touch base on how do we even fix these robots? How do we service these robots? It may not come across naturally to some people, but it does indicate the desire to discuss it from the startup's point of view. These things give good depth. They give some truthfulness to the whole communication. So that is how we at Peppermint end our communication. Now, what you just saw is literally a 7-8 slider. And this is our communication no matter what, whether it's investors, it's customers, it's potential distributors, government grants, because that's the ground truth. Now, on top of this, we choose to add 2 to 4 slides, depending on context. If you're talking to investors, we would love to talk some numbers. If we're talking to customers, we would love to talk success stories, case studies, real benefits. If you're talking to distributors, we would love to talk the volume and the actual return on capital deployed that they may enjoy after collaborating with Peppermint. So we leave those things to be as a reaction. We usually end our 7-8 slides to park it on the levels of questions. We love questions. I would love to answer questions on any conversation or deck presentation. And if the questions are rich, deep, I think it's been a successful presentation. If the questions are shallow or very primitive, then I think the deck has not done its justice to the time. So let me just summarize those 3 things once again. Setting good context, great design and flow to it, Do not read the deck. It's a story. Let the deck be reformations. And the end is, what is the number one thing you are currently working on and are going to be continue to working on in the near future, at least, if not the mid to long term. So that would be my 2 cents on Peppermint. And as you may observe, this is my placeholder slide. We always leave it here because this is what talks pretty much of what everything we do. It demonstrates that we manufacture machines. We are confident to have multiple products. We have happy and paying customers. And it also gives a sneak peek into our future. So that's broadly on my 2 cents on Peppermint and the deck and the philosophy to presentations we have. Happy to address any questions. Happy to share more details if you are interested in it.
Okay, great. Ronald, thank you very much. That was very nice. I'll just get it started and then others can pitch in with their questions as well. When you are, say, talking to a potential investor, of course, the fact that you have products, you've made so much progress, all that is something that definitely will come out from whatever you showed just now, right? But do they want to see how good your team is, what kind of investments you're seeking, or what has happened so far? When you talk about numbers, do they ask you details of how much money you're going to make? What is the margins? What is the cost? All those, how much detail do they get into? And what is it that and in your first pitch deck, which you sent to them, would you cover any of those, or what would be your ask, for example? In sense, what would you say to them? Just a product deck, does it cut it?
Sure. So there are trade-offs here, but let me answer by answering your first question. Team is certainly extremely important if it's an investor. If it's a non-investor, then maybe it's something which we can do without at times. But yes, with investor, the team is, so we have a couple of slides on team. So what we do is we measure, are we talking to hardware startup friendly investors? Then they're very interested in the specific skill sets of investors. If the investor or the potential investors are more about success stories or evidence of excellence of team members, then we are focusing on some team members who are in a position to bring that evidence of success, evidence of excellence. So yes, there are 2 variations of team slides that we definitely use. In fact, even in this, I'll probably open another one again. So that's number 1. Number 2, we have chosen as Peppermint to focus our communication around our products, which demonstrate most of the things as a choice. There are now very many routes to it. Depends also on what stage the startup is in. Is it like very early stage, pre-seed? Is it seed? Is it scaling up fast? Has the product market fit been established already? Then we are talking about that the success is there. This is how we replicate that success. So I would have probably different approaches to different context. But yeah, team, I would think you are right. Doctor would be there, right there, up top. Absolutely.
By the way, do you pitch yourself as a revenue play or an asset play? In the sense, since you're showing products, probably people will ask you about sales traction. And the people, sure, you will probably have to show some marquee customers and a lot more. So your pitch is around growth in sales.
These days, yes. So we are now in a stage where we have early customers, repeat customers in India. We have early customers in the Middle East. So we are very confident of what the product was designed to do, and it's doing that. Now the question is, how can we scale this up? So yes, we now do talk of scaling of operations, speed of scale up, after markets, after sales support, and the building blocks, how we can do it forwards. This is where we are today. Last year, same month, we were probably talking more about how our technology is completely level up on the incumbent technologies that there are available about housekeeping. So it has evolved. Our focal point in our first year was about concept, how housekeeping is a big global pain point. Last year, which is our second year of operations, it was about our tech stack and our robots. This year, it's about our width of operation and our depth of engagement with customers. So we go into commercial models, as you said. So we have, in India, we have a lease and a rental model for robots. We do 36, 48-month contracts on rental. Outside India, we have an outright sale model. And then there are, again, pros and cons of it. These points usually invoke a lot of questions, which we love. So yes, so these days, to conclude, what I was trying to say is, we are these days talking about scaling up of our operations. Yes.
There's a question in the chat box about whether you would think that having a 30-second video in your deck would be useful, or did you consider doing that? Why did you, I mean, or you just went with pictures?
Oh, no, absolutely. In fact, now that you say it, let me share the 30-second, it's literally 30 seconds. And this is where we actually talk of how Peppermints are upgrading the housekeeping operations in different industries, right, from offices. So here we talk of the intelligent features of our products. The left one is going so fast because there are no obstacles there. As you'll see, the intelligence can also detect stains. The robots are smart enough to detect Coca-Cola on the floor or chai on the floor, and they'll scrub deeper, faster, and more powerful. That's how the middle box you can see here. So yeah, we do use video to our benefit. It gives hands and legs to the whole narrative. And also it validates the effort. We have a 14-member R&D team now in Pune, and pretty much every 6 months, our videos are evolving. So yes, to answer your question, we do use this very 30-second docket these days. Again, it evolves every few months, but yeah, this is a docket we currently are using, and it's very powerful. Video invokes more questions.
Okay, so did you go about, there's a question also on, I don't recall, but have you recently raised an investment round, or you've chosen to go the sales route?
We have, Doctor, in fact, it's not public. It will be public next Wednesday, this coming Wednesday. So we just raised our growth round in June. We have done a pre-seed and a seed round in the last 2 years. So this is a third consolidated effort on our fundraise, which has just concluded. And this fundraise has been done with a mix of investors in India and outside India, as we are scaling up outside India also now. So yes, and what you saw was the deck actually, which was used in, I would say, more than 90% of the times. Yes.
Good, congratulations. Tell us, how did you
go
go about identifying investors, shortlisting them? Where did you get traction? Where did you not get traction from investors? And what were some learnings there?
Sure. For this opportunity for us to raise funds and get some resources on board, we had goals in mind. And as a B2B industrial robotics startup, for us, the prosperity and the roadmaps are into B2B sales, which are quite different from B2C companies or startups, or especially D2C now, which I see all the time. It's very human-led. So we identified a category of people or personalities of people that we were looking for. We were looking for people who have deep insights into large industries, large sectors, or they have deep insights into global distribution. So when we started homework for our fundraise in March this year, and inevitably it takes 3 to 4 months, we were focused on what we were looking for. And I would borrow some pieces from the earlier discussion that it became more like a sales funnel. We chose a subset of potential investors and started talking to them. 2 divergent journeys. One was angel heavy, one was angel light, one was institutional investors, one was angel investor heavy. And basis of the response and our preference, we started fine-tuning it. So by month 2, I would say post 60 days, we had finalized what we wanted to conclude on the whole fundraise. So that's how we went about it. We had a very goal-based approach this year. Last year, on the other hand, it was more like we wanted help from wherever we could receive it. Good, like-minded people is what we were looking for. This year, on the other hand, we were looking for actionables on people we associate with. And we, in fact, have goals. We want to work with them through their networks to sell more robots.
So, Runal, if you were looking for an investor who understands and has deep insight into some of specific industries like retail or whatever, how do you go about finding them?
Sure. So, best policy is tops down. Let me give you an example. For us, large facility management companies are great aggregators of such machines. So we went looking for who is involved in real estate, facility management, housekeeping services, construction. This is the kind of background that definitely would give us inroads. The second subset would be very large industrial conglomerates, where usage of robotics is very prevalent and urgent. So we shortlisted number of Fortune 500 companies, especially in manufacturing space, who have presence in South Asia, Southeast Asia, and Middle East. And we went tops down. We were looking for CXOs. We were looking for venture arms of those Fortune 500 companies who invest in similar startups. So we went either, I would say, background first on the profession, or we went sector first on certain companies. And that was our approach this year.
Great. There's one question here about, did you find any differences in investor response for Karkhana versus Peppermint? How much being a serial entrepreneur help you to attract investors, especially if you had success story in the past?
Sure. So two different parts to this question. One extreme difference. So Karkhana started in Bangalore and Peppermint started in Mumbai, Pune region. So one complete cultural difference on the way startups are approached. Karkhana was an e-commerce marketplace in 2009-10. So that was something which was quite, I would say people were aware about it. There was significant awareness of e-commerce. Even back then, there was Flipkart and others. So reference points were the startups who had done well in those sectors. And I distinctly remember some presentations of Karkhana where we were asked specific questions to tell us how we were different from Flipkart, or how we were different from, back then was naptol.com and many other .coms. So there was, I would say, references which people would draw from what business models or sectors we were in. Now, on the other hand, there's so much depth to everything, even hardware startups, which is one of the smaller subsets of the larger startup ecosystem. Everyone is in a much deep, informed position. So as entrepreneur, the job is to be extremely prepared. I would encourage anyone to not leave blind spots, things like unit metrics, depth of team, width of team. These are things which are very important to address. So that is one big difference I see between 10 years back now, almost. The second is, does it help to be an entrepreneur with a history? 100%. To be a serial entrepreneur, 100%. So in our case at Peppermint, our first round was actually our investors from Karkhana. And one, that was such a good validation of trust and faith that people who you know already have, even so many years down the line. And number two, it gives so much more confidence to get the journey up and running. So significant benefit, I would say. The Karkhana network of investors, customers also has been immensely helpful. We are so lucky that we enjoy that leverage.
Sure. I think, thank you very much. This is very, very useful, very helpful. There's still some questions coming in, but we have to move on. But Shoma, can I just take one or two more in the week? Okay. Could you please elaborate on your efforts on internationalization? That's one question.
Sure. Favorite question, by the way. Extremely complicated. So it's not easy to actually export things, to make and export things out of India. So two big takeaways I can give. One, there are so different quality standards and safety standards and user standards for different countries that I think whether software or hardware startups will be meaningful to be aware before moving outside India. That's number one. Number two is, who are you collaborating with, or are you going all alone? On behalf of hardware startups, I can say quite confidently, going all alone would be the difficult route here. To leverage people who already understand some aspects of your products or services is completely helps. So we have really great channel partners across the Middle East region. We have one in UAE, one in Qatar, Bahrain combined. We have one in Saudi, KSA now. We are looking to scale that up further to Kuwait, Jordan, etc. So it's a long journey. I would say it takes a year to truly go from thinking of internationalizing and actually being outside India. So a lot of hard work, be prepared. Certifications, please be mindful of that. Something we really burnt a lot of time on. That would be my 2 cents. Extremely liberating. Once it happens, it's a game changer for confidence, for your unit economics, for margins, gross margins, and for learnings. So that would be my 2 cents.
Okay, great. So thank you so much. I think we'll stop here. Thanks a lot for taking the time out, volunteering to do this for us, and sharing all these insights. Very, very valuable. Okay. Thank you. Thank you so much.
Doctor.
Yeah. So I think you can leave now. You know, if you wish, you can stay, but otherwise, I don't want to waste your time. Let's continue. Shoma, over to you.
Thank you. Thank you so much, Runal. Yeah. So Dr. Premnath, I think you wish to talk about these slides before we move on to the pitch storyline by the cohort members.
Yeah, I think what we will do is first we will listen to all 3 of them. Okay. So let's do that. Can you go to that section and then continue with it, and then we can, right? So let's hear the 3 storylines. Okay, go ahead, please.
So we have requested 3 of our cohort members here to actually share their pitch storyline. Which we found that they have done really good job of it. So first to go would be Dr. Kalpit Desai. Let me very briefly introduce him. He's the CEO of Dataculp. He's an entrepreneur with leadership experience in multiple startups as well as new research. He holds PhD in biomedical engineering from University of North Carolina at Chapel, and has 15+ years experience in building innovative products and solutions by leveraging the power of data, AI, ML algorithms for healthcare, energy, and manufacturing domains. So with this, I would request Dr. Desai, if you can share your screen, because I do not have your pitch storyline. So you can share your screen and you can talk about your storyline. Neha,
sure, Soma.
Can you please make Dr. Desai the co-host? Yeah, you should be able to share now.
Yeah, Kalpit, are you
One
able
second.
to share? Yeah.
Yes, I think it is giving me the opportunity. Is my screen visible?
Yes.
Hello?
You can blow it
All
up a
right.
little bit. The font size is very small right now. So if you can blow it up.
Is this okay?
Yeah, good. Kalpit,
Yeah.
can you walk us through it? I mean, you can talk, you can, read it out, and then we can go ahead with it. Okay? Continue.
Perfect. All right. So I am Kalpit Desai, the founder and CEO of Dataculp. Dataculp builds innovation-driven products for hygiene and safety for both training and enforcement. Dataculp owns proprietary know-how of leveraging AI and machine learning to differentiate normal versus abnormal patterns in camera as well as other sensor data. The Dataculp team includes scientists and engineers with a strong academic pedigree, including University of North Carolina, Chapel Hill, IIC Bangalore, Ahmedabad, and collectively 50 man-years of experience leading technology developments for healthcare, energy, and industrial segments at both MNCs like GE Research, Lennox, Aegis, as well as startups like Bijli, Tally Analytics, and Jugis Medical. The flagship product of Dataculp is a hand wash training and compliance aid called Vajra Hands that can be installed on existing wash basins without occupying any additional floor space or needing any change in the infrastructure at hospitals. Vajra Hands also provides real-time and granular step-level feedback on the ongoing hand wash without requiring internet connectivity. Thus, Vajra Hands promises to be a strong contender for capturing the global hospital hand hygiene market with a CAGR of 8% estimated to reach $7.7 billion by 2025. Dataculp is also adapting Vajra Hands for pharma manufacturing, food processing, and hotels industries. Besides this, Dataculp is also developing Vajra Worker and Vajra Plant for the industrial safety market with a CAGR of 6.7%, estimated to reach $7.7 billion by 2025. Dataculp has recently completed the fully paid installation of Vajra Hands at 7 hospitals across India. In a field trial at a 350 plus bed hospital ICU, Vajra Hands improved the compliance of hand hygiene by nearly 15% within a month. Japaigo, the internationally reputed NGO in healthcare, has launched an elaborate, fully funded study to quantify the impact of Vajra Hands on hand hygiene in hospitals. We are in advanced talks with 20 plus hospitals, pharmaceutical and hotel clients for deploying 50 to 100 Vajra Hands installations over the next 3 months. At the heart of Dataculp's technology platform is a deep understanding and mastery of signal processing, machine learning, computer vision, and real-time systems design for detecting activity patterns in camera and other sensors. The Dataculp team has proven expertise in these areas as evident by numerous papers and patents. Dataculp has won the Defense India Startup Challenge, DISC 2 in AI category, also won Promising Startup in Strategic Electronics, Alcina 2019, and is a member startup in the prestigious NVIDIA Inception program. As of June 2021, the company has invested nearly 20 lakhs into the product development and testing. In the next 24 months, Dataculp plans to scale up the sales and distribution of Vajra Hands while continuing the design refinements in parallel, driven by customer feedback. We aim to deploy 1,000 installations of Vajra's suite of products across developing countries like India. That would be through strategic partnership with NGOs such as Japaigo, and also deploy 1,000 installations of Vajra suite of products across developed countries through strategic partnerships with established players in hospital hygiene, sterilization, and industrial safety markets. With this, we expect that Dataculp will be an attractive merger and acquisition or strategic investment target for large companies in hospital hygiene and industrial safety domains, including global majors such as Teris, 3M, Unilever, Honeywell, Hartmann, Schultz, etc. It is in this context that Dataculp is currently seeking an investment of rupees 3 crore to help build the sales and marketing channels and partnerships, and in parallel simplify the product design and reach the milestone of 2,000 installations globally over the next 24 months. We are also looking for mentors and advisors who can open doors for global customers. That's all.
Thank you very much, Kalpit. Very nice. I have a question on the chat box for everybody. So how many people want to invest in Dataculp? How many yeses? Okay. Okay, great.
Wow.
So you'll get a lot of support now. Anyway, let's talk about the next one. Thank you, Kalpit, for sharing this, and it helps because others can get a sense of where they stand and what they should be doing for their own work also, right? So let's move on. Yeah, let's go to Harish now. Is it who's
Yeah,
it next?
Harish. It is
Yeah,
Harish.
okay.
So
Yeah.
he's the CEO and co-founder of Agnit Semiconductors, which
Can
is
you
an
go full
IIT
screen?
Bangalore.
Full screen?
Yeah.
Sorry.
IIT Bangalore spin-off. And Harish has a PhD from IIC and 12 years of experience spanning the material science and device physics aspects of gallium nitride electronic technology. And I leave the company part for Harish to talk about. Harish, over to, no, I'll share your screen, just a moment.
Great. Shoma, is it okay if I share? I made a few changes.
Yeah.
All right, no problem. Please go ahead.
Yeah, great.
So you have
Just
to
1 minute. Do you have permissions?
Yeah, he has.
Yeah.
Yes.
Okay. Good. Yeah.
Excellent. Okay. Can you see my screen and is the Zoom level okay?
Yes.
Excellent.
Think,
okay. Yeah. So in that case, I'll get started. So thank you all for your time. I'm Harish Chandrasekhar, co-founder and COO of Agnit Semiconductors. Agnit Semiconductors is a deep tech startup working on next generation beyond silicon electronic components, which are based on gallium nitride based semiconductors. So gallium nitride technology is the key enabler for 5G networks and for efficient chargers in electric vehicles. Agnit is a spin-off from the Indian Institute of Science, Bangalore, and we have exclusive licensed technology from IISc. Agnit's core team has a combined experience of more than 100 years in the semiconductor value chain, all the way from the starting materials to the final electronic systems. So in terms of product and business opportunity, our first two products are going to be power amplifiers for 5G towers and power switches for compact EV chargers. So these are applications I should mention that can only be addressed using gallium nitride technology. So gallium nitride is a pretty niche technology as it stands, and there are a handful of players globally. And this is also export control technology at the moment. So this prevents Indian electronic systems manufacturers from accessing this key technology. So gallium nitride is also not a drop-in replacement for existing solutions, and it needs the components and the systems to be co-designed. That's the way to extract cost-competitive performance from some of these, systems. So Agnit, with its differentiated, non-infringing, patent-protected technology, is presently the only Indian gallium nitride device manufacturer. We are ideally positioned to offer reliable, cost-effective gallium nitride solutions to Indian players while mitigating semiconductor supply chain risks. So Agnit is focused on Make in India for India in order to establish and prove our technology first, and we intend to scale up to a Make in India for the world solution. Okay, so in terms of global market opportunity, the market size was 1.3 billion USD for GaN 5G components in 2020, and it's growing at a rate CAGR of more than 20%. While the market for power switches for compact EV chargers was 1.9 billion USD global market in 2020, which is projected to grow at greater than 40% for the next 10 years. And I should point out that in 2020, 5G as well as EV charging is very much in its infancy. In terms of status and traction, Agnit is currently in advanced stages of prototype development for 5G power amplifiers and power switches. Development in close collaboration with prospective customers for both product lines. So two prominent Indian 5G equipment manufacturers have offered to qualify Agnit devices in their 5G testbeds towards final product acceptance. So we are similarly in discussions with electric vehicle manufacturers for buy-in to similarly qualify our devices in their onboard chargers. So Agnit also has access to a state-of-the-art GaN manufacturing facility that's being commissioned and will be up in the next 18 months at the Indian Institute of Science, which should take care of the manufacturing aspect of things. This will also enable us to quickly scale up from prototype development to a low volume manufacturing sort of a scale. So we've also raised funds to the tune of 10 crores from major investors thus far to develop our prototypes. So in terms of technology and IP, our technology is rooted in cutting-edge interdisciplinary research from the Indian Institute of Science in the gallium nitride materials and device spaces. So this research has been published in more than 50 research papers in leading journals in the field, and we have more than 20 patents filed and granted, and a significant amount of process know-how and expertise in gallium nitride. So these patents and know-how have been exclusively licensed to Agnit from the Indian Institute of Science. And taken together with access to a dedicated GaN manufacturing facility, this gives us a widening competitive advantage over players who are currently looking to enter this attractive and fast-growing market. In terms of next steps, by the end of 2022, Agnit will have prototype GaN power amplifiers ready for qualification and testing in customer testbeds for 5G. By early 2023, a prototype GaN power switch will be ready for pilot deployment in EV chargers. And Agnit will hopefully be a partner of choice once systems with our components are fully qualified by customers in their systems. Our next focus will be on the scale up of our process technology from a prototype sort of a low volume scale to a low volume production scale. So what's our ask? So in this regard, we are seeking an investment of rupees 20 crores in the next 12 months towards our process scale up goal that I just mentioned. We will use this money to transition our GaN technology into a low volume production in the next 24 months thereafter. This will let us enable 100x the number of components that we currently have at the prototyping stage. So this should help us better capture our customer demand volumes. I'll stop there. Thanks.
Great. Thank you very much. Looks like Tulsi has convinced you to put in a much larger number in the ask. So
Yep.
let's hear some applause for Agnit and also all the volunteers who want to invest in Agnit. Okay, good. Harish, I think that came out well. Of course, let's keep improving it as we go along, but it has come out very well. Thank you very much for sharing this as well.
Thank you all, and special thanks to you and Tulsi and to Shoma for spending the time trying to refine this. Thank you.
Sure. Shoma, over to you again.
Yeah. So next is Harshesh Gokani. Harshesh is
Full
a
screen
founder,
again. Yeah. Okay, good.
founder of For Health, a venture that develops robotic assistive technologies. Having been a certified management consultant from Daimler, he has consulted in multiple countries across several departments. An alumnus of NITK Surathkal and has a strong hold in mechanics design, which has helped him successfully lead the low-cost automation hub at Daimler India. So, Harshesh, would you be sharing your screen, or shall I do it for you?
Yes, thank you so much. I will be sharing the screen. So,
all right, sure. Please go ahead.
Thank you.
Okay, so first and foremost, thank you so much. With that, I will begin. Is the Zoom level okay? Am I audible?
Yes.
Okay,
it's all good. Yeah, let's go ahead.
So I'm Harshesh Gokani and I'm the founder of For Health. Our core purpose is to transform the physical rehabilitation and fitness sector by developing robotic assistive technologies backed by patent pending inventions. We serve hospitals, orthopedic centers, rehab clinics, fitness centers, and old age homes to achieve better clinical outcomes by taking over the repetitive tasks and exercises for recovery and daily life. Our team of 8 includes engineers and designers with strong academic and industry pedigree from NITK Surathkal, MIT, Daimler, and Fuso, and prior experience in developing medical devices with a track record of scholarly and inventive contributions. With respect to products and business opportunity, our first product, an intelligent lower limb robotic device, is built to cater to 1.7 billion people suffering from disorders like strokes, Parkinson's, hip replacements, etc. All these result in paralysis, muscle weakness, or stiffness and require daily physiotherapy as treatment. In fact, 2 people get added to that list every minute. Regular physiotherapy achieves only 30 exercise repetitions per session against a recommended of 400 plus. Unlike other robotic rehabilitation devices at a cost 5 times lower, our device learns these exercise repetitions and regenerates those exact patterns on the patients. Being the first to introduce portability in rehabilitation devices, we enable the possibility of remote healthcare with treatment taking place at the comfort of home with or without a physiotherapist by the side. Providing the recommended level of repetitions, this device further frees the therapist to work on 2 times more patients while also achieving better clinical outcomes. Considering the monotony of physiotherapy exercises, our device gamifies this treatment while collecting real-time data of patients' important parameters. With this, For Health plans to be a significant brand and player in the global rehab and fitness device market, sized at $2.6 billion in 2020, with an initial focus on the lower limb rehabilitation market segment of $500 million. For Health has built an alpha prototype with the help of clinical collaborations and user insights from physiotherapists in India, such as working in KMC Mangalore, as well as Myers Physiotherapy College, and from USA, who are independent board-registered physiotherapists. In our laboratory, our prototype has proven to be safe, while also effectively mimicking a physiotherapist's movements with the required biomechanics, motions, and forces. Heart of our technology lies in collaborative robotics, model predictive controllers, and the Internet of Things. A deep understanding of applying these to rehabilitation and fitness is the core strength of our team. Along with strong academic and research collaborations covering physiotherapy, bioengineering, and design, our core know-how includes accurate control of motorized robotic joints, generating optimized robot trajectories, and designing user-friendly robots. We have developed unique novel strategies to implement these, which are further protected using patents and design rights. So in the next 24 months, we aim to launch the product and make our first sale to leading centers of orthopedic surgery and neuro rehabilitation, such as Kokilaben Dhirubhai Ambani Hospital and Sancheti's Hospital's Knee and Hip Replacement Department. The journey to this will involve product development and validation, regulatory approvals, certifications, clinical investigations, and also developing pilot manufacturing capacity to meet our first order requirements. For Health now requires 2 crore rupees to help the company hire key team members, build further value, and meet key milestones in the next 24 months. We will arrange 75 lakhs through grants and are seeking the remaining 1.25 crores as investments. We now need your support to provide accessible healthcare to billions wanting to live pain-free lives. Thank you.
Good. Very nice. Excellent. Yeah. So, yeah, but that said, there's still scope for improvement, right?
Okay.
I
Yes.
can't be saying only good things, right? Okay, join me in giving Harshish a round of claps, right? Very nice. I think it came out very well. It's well-rounded, had all the components put in place and well-crafted. Great job, right? So all three of
Thank you so much.
them have done a great job, you know, is Manisha there? So Manisha, in the last round, when we had a round of selections or evaluations for the elevator pitch, Vaibhav complained that they didn't get a cash prize. So you should give a cash prize to these three guys. Manisha is keeping quiet there. So, so anyway, I've given my pitch for you guys. So all the best. If all goes well, you'll get something, right? Congratulations to all of you.
Yeah, I can speak now. Sorry, I was not able to get myself unmuted. So I'm sure.
I thought it was intentional, Manisha.
No. No prices. I'm always for prices, so no problems there.
Oh yeah, Harish is asking for 20 crores.
Vaibhav
That's not possible.
promised a price. I don't know that. When was it?
No. Vaibhav was complaining that the people who gave comments got prices and the guys who did the elevator pitch did not. So.
Oh, but that is what is announced, right? We get as per what is announced. But yeah,
Okay.
I think today's were great pitches, great storylines. I think we'll go with your suggestion, Premnath. We'll go with the prices for these three. Yes, sure.
Okay, great. So Shoma, back to the slides.
Yeah.
Okay, shall we go back? To slide 9, please. Yeah. Okay. So let's begin. We are going to close now very shortly. It's already 7:05. Just wanted to leave you with a few slides. Thank you very much. I think everybody has got a sense of what to expect. So there's no point belaboring this discussion and taking it into too much detail. You'll get those slides anyway, so that's not a problem. So let me just give you a few high-level points which I wanted to tell you about and leave it with you so that you can work on it later. So next slide, please. Yeah. So when Venture Center works with different startups, we often observe that these are some of the things that you end up needing. Some which will be you'll be using with others outside, and some which you need to use internally as well. So, and some of these you have seen that we have tried to cover all through this AIM Prime program as well. The first thing when you're trying to land your first supporters, partners, champions, you need a simple first deck, which basically convinces them that it is worth associating with you and also to support you. And very often at that stage, it's a single person with a story or one or two people with a story and nothing much more that, you have to show. So there's a lot of concept selling involved there, but nonetheless, it has to be done. The second category that's listed here is for internal strategy discussions with the team and the mentors, right? You invariably have to keep continuously building decks or improving on decks which are for internal discussions, which lay out what your plans are. They are not necessarily the ones which will be seen outside, but will be continuously discussed with your board, with your mentors, with your founding team, to keep sharpening. And you may have a plan A and a plan B there. You may not be discussing your plan B anywhere outside, but you will have a plan B probably, and some expanded financials which have details of how the business is going to work. And I've added recently this so-called internal story, which I think is a good idea. I sent you a link on WhatsApp of one of the IDEO key team members speaking about the kind of things that they work with startups on. One of them is an internal story, which we find is actually, I think, is very important. One of the biggest elements of every company, big or small, is HR, is always the team, the people involved, and so on and so forth. So internally, if you have a lot of deep understanding and synchronization and a lot of alignment of goals, visions, storylines, you will find that you will probably benefit a lot from that within your organization. So this may be very brief, but you have to construct your internal storyline to communicate to everybody who's key in your company. For grant funders, a rough sketch of what is the business is more than important, more than what is required. It is you don't need a very detailed discussion on that, but you need the essentials accurately and briefly listed. For investors, for preliminary discussions, if you're writing an interesting email, you might need to use some elements of your elevator pitch which are constructed well, and then also some slides which are sort of an appetizer. In some ways, what Ronald showed was the appetizer. Okay, the product deck that he was showing, and if there's more scope for detailed discussions, you can go ahead with your pitch deck. And sometimes Shoma, the slide has changed, and sometimes you will also need to use some essential financials. If you're asked more, you might share some confidential slides which you might have to keep ready in advance. And we in practice have found that the storyline which we discussed, we saw 3 of them today, is quite important and useful for planning and for making your pitch deck. You can always try to make your slides and then try to put in a story in it. Another way of doing it, which we find more useful for scientists and engineers, is to do the storyline and then do the pitch deck, because it reduces the temptation of trying to use technical slides. It reduces the temptation of unnecessary details. It reduces the temptation of highlighting things which are not important for the business or for investors. Typical examples being lists of papers, publications, patents, whatever it is. So these kind of things, it helps if you have a storyline first and then make your pitch deck. Of course, you can always, so your story has to speak on its own, and you're doing it extempore, but your slides are, you're not reading your slides. Your slides are not meant to be something that is to be read, but to support a comment that you're making in your storyline. Okay, suppose you say that this does 15% better. You may want to put a slide which clearly indicates some data which illustrates that it's 15% better in some way. And after you have a interest from an investor, the rest of the things will come in, like term sheets, essential financial, share progression chart, which you heard from Sujata as well. Next slide, please. Okay, so the first deck, you will notice, doesn't have a lot of details on financials and so on, but a very important aspect of this is the problem, the solution, the value proposition. So these 3 is one bucket, and of course the revenue model. We often find that if you can communicate the product market fit for a niche market, and it's very, very convincing as the best possible solution for that problem in that market space, that helps quite a lot for people to get their heads around what you're suggesting. If you keep it too vague, it doesn't help very often. Revenue models and all of these are also important, but get the value proposition and what you're offering to the customer right, and this becomes a very important part of your first deck. And this is what typically Shoma would want to see, because Shoma is the first person that most entrepreneurs meet in Venture Center, and this is the kind of stuff that she would want to see when people approach her. Next slide. Now, if you were applying for programs, grant funding programs, especially of the innovation funding kind, not the research funding kind, okay? Innovation funding is like BIRAC's BIG or Prayas from Nidhi and so on and so forth, in which case they are looking to make sure that the money that they are putting into your efforts is directed toward technology commercialization. And so they do want to see a business outline. And I'm just calling it a business sketch here. It consists of primarily just being very clear about what is being offered, for whom, and who will pay, the value proposition of value for whom, what value, and compared to what, okay, which we have done quite extensively, and the revenue model, how will it make money, and what are the key risks and uncertainties to that revenue model. Okay, so this is a typical summary business sketch, which will be, of course, it can be written up in many different ways and used in a, say, a BIG presentation or a AIR presentation or a SBRI presentation and so on, right? So you have to cover those things. How you do it, you can be creative about. Next slide. Yeah, so this pitch deck, I have already sent you some instructions of don't try to do it exactly the same way, but you can change it according to your own storyline. But your storyline is what will be the continuous, like a sutradhar in a movie, but you will be showing some slides which cover some of these things. Also remember, sometimes your slides are seen without the having of the benefit of you being there. So make sure that slides don't require you to speak through it. At least the essential things have to be there, and you should be able to, somebody can look at it independently and should be also, they should get excited about it. So it's not that you have to be there to speak through it. Okay, so the essential things have to be there. So here are the parts where the company overview, problem, need, and you saw Tanuj and all also talking about the same thing, solution that you're offering. The business model, he called it revenue models, basically technology and IP. I think even Tanuj had something about this. And here, this is the opportunity to also talk about some of the USPs, the uniqueness, the value propositions, all of those things somewhere in this, and how you're distinguished compared to the competition, the risks and threats and plans to deal with them, and how you'll stand out, distinguish yourself, etc. The development and execution plan, because now you're talking about building a business to make something happen. So there will be some kind of a development execution plan with timelines. It need not be very detailed, and if you have a detailed one, don't try to put that exact detailed version on your deck. Try to do a summary version which is easy to read and simple. Don't try to pack your slides, okay? However good your formatting is. The team that will execute and deliver, the resources needed to execute, and the investment proposal or the ask, okay? And you can have appendices. By the way, in the past, the people used to do Word files and documents of business plans, which is still done in some places, but nowadays I think most of the people just do with just PowerPoints. You don't need to really do a Word file report format and so on and so forth. But sometimes for some parts you may need to have Word files, like resumes, for example. Somebody might do a deep vetting of somebody to see, do you know this guy, does he know his stuff, especially if it's a technical, very technically heavy area, and people may want to see what exactly do people know in that field. Gantt chart, financial simulations. As I told you, this is mainly for understanding the mechanics of your business, and the summary of it would have come up already in this resources needed and the investment proposal. Okay. Resources needed slide was like what Tanuj showed, saying this is the money we need for these activities. You'll remember even Ashwin showed a slide of a similar kind. Okay, and that also was their proposal or the ask. Okay, that is what they are looking to raise at this time, the next 2 years, to do whatever. Yeah, next. Yeah. So the other document, and other thing which I asked you to also think through is the elevator pitch. And we have gone through this also and seen one example as well. And you guys have all done it. So, don't make it a formula, please, because it again, everybody is unique in a different way. They have their own strengths. Every company has your own strengths. So it would roughly have intro, business and value to customer, the uniqueness, the opportunity, the team, and the ask, right? So these are some of the things that you may want to capture. The business captures the market size, also the opportunity at large comes here, and the opportunity as well. And the value proposition, uniqueness, and I think everybody mentioned uniqueness also in the who spoke first before, Tanuj, Ashwin, and so on, and the team, of course. Next. Okay, so I think with that we are done. For the fourth, the instructions I have already sent you. So you have done the storyline already. I request you to make a fresh pitch deck, slides to walk through the storyline, but don't read the storyline, and you'll have to do it extempore. But at the same time, the pitch deck should aid you in supporting what you're saying. Please try not to use too many recycled slides, especially technically heavy ones. Learn to do some clean formatting as well, such that it is easily readable and easy to do. Harish has asked how important is point number 2. Yeah. So no, it's a Harshish who's asking. Yeah. So see, Harshish, if your slides are supporting your deck, that's fine. You can use those slides, right? But just be careful. The problem I'm alluding to is where you have lots of unnecessary information in the deck, and consequently the attention of people keeps diverting. So people will come up with unnecessary thoughts and questions while you're pitching, which is what you start losing your audience to unnecessary and unimportant things. You just want to keep the focus on whatever you are saying, and you want them to treat that as important, right? Imagine if I put a stray name somewhere and somebody recognizes that name and has a view on that, it distracts your presentation entirely. So the idea is to keep it simple. Okay, as simple as possible. Don't bring in too much unnecessary content, and also reduce jargon, reduce too many technical slides, not necessary here. You can use a slide design and format that you like and reflects you and your company. We are not going to give you a format, and you can do it as per your own wish. Be creative there, be resourceful. If you have a friend who can help you with thinking through design, get it vetted through them. Ask them for views and inputs. Practice your pitch with somebody who doesn't know anything about your field, and see if they understand it. If they understand it, that's great. You've already done what is needed. So these topics which I had given you were only meant for you to, next slide please, only to give you some guidance, but don't use it as a you don't have to use the same format or the flow. Okay. So time available will be 7 minutes, and the question answer session is about 7 minutes. Ensure that the slides are easy to or a pleasure to read. As I told you, try to have it such a way that it can be read independent of it can be at least understood. The highlights could be understood from independent of you speaking through it, but it should not be an exact replica of what you're trying to say. It can be points here and there which are put together. Please do practice your sessions. I request all the team members to participate in this. We have tried to condense everything in 3 months so that in an accelerated way we can get here, and then we can focus on other aspects of your business. This is the foundation, getting the storyline right, getting the story right, and so on. After that, it's all about executing. So Please try your best to practice with your teammates. Request incubator team members to also contribute, as well as the in-house mentors who will also participate in that process. Okay, next slide. This is the outline that I have provided you. You can use whatever aspects of this that you please feel free to change it. Try it. You can use it like a checklist to see whether some of these things are there or not. Okay, next. Yeah. Okay. So with that, we are done for today. Thank you very much. Thanks a lot. Any questions? You can put it in the chat box. I'll try to answer it. Those who are done, don't have any questions, can leave. Thank you so much. Okay. So Shoma, thank you so much for running this.
Yeah, just a moment. I'm just posting the feedback link here. So I would request all the
yeah. Please do
share their
provide the feedback. It's important for both our records and also for learning and improving. Okay, so here is the form. Please do fill it up.
And quick announcement. So Dr. Premnath already mentioned. So tomorrow we are hosting open hours for pitch deck, where Dr. Premnath will be there and Venture Center internal mentoring team will be there. So all of you please join this and present your pitch decks. The instructions have been given to you. 4th September one we just now discussed. So that's clear. And there are a couple of sessions also coming up. On 30th August, we will have Mr. Hasid State talking about art and science of negotiations. And on 1st September, there will be a panel discussions moderated by Dr. Satya Dash and Dr. Premnath on market entry, sales, scaling, going global, and exits. So please do attend these sessions as well.
Yeah, Shoma, the session with Satya has 4 experienced entrepreneurs who have scaled their business recently. Okay.
Right.
So, and some have exited, 1 or 2 have exited also. So it'll be great experience learning from them as well for the next phase of your company, hopefully. Okay. Thank you. Thank you so much. Thanks to everybody who contributed. Please do fill up the feedback form and we'll see you again soon. Okay.
Tomorrow.
Yeah.